How is FedNow going to change the game? How is payments and your place within the payments ecosystem going to change?
Thank you so much for having me. Financial services is changing very rapidly, and payments specifically is changing very rapidly right now. We're going from a payment system that was really oriented around cards for quite a long time to now adding new payment trails into the system, and that hasn't happened since ACH and cards really started to scale back in the 70s and 80s. As we're starting to look at FedNow, this is going to be a brand new payment rail coming in. And we expect it to increase consumer choice, increase competition, increase optionality for people out there. So we're really excited for where the potential of it is, but it's very early. We've just launched FedNow with 35 banks. Hopefully it goes from 35 to many, many more soon, but it's still in the early stages.
How much of a competitive threat is it to fintech in and of itself?
So I actually think that FedNow is a large accelerant to fintech. So when you think about the way that you get paid, perhaps for payroll, when you think about the way that you send money to a friend, when you think about the way that you maybe transfer funds from your brokerage application back into your checking account, today it oftentimes takes 3 days. You're using the legacy ACH system, which is a wonderful system, has scaled incredibly far, but it's slow. As you look at FedNow, FedNow is going to be an instant addition to that. So you could run, yes, a slow transaction on ACH still for quite a long time, or you could use FedNow to deposit those funds instantly or move them a lot faster than you would otherwise.
Zach, good morning from San Francisco. Good afternoon to you in New York. There'll be viewers of Bloomberg Technology here in America that say the instant transfer of funds, 24/7, 365 days a year. Yes, that's what I want. But it sounds like the reality of this kind of nationwide rollout is still a way away. When do you see it as sort of a commonplace standard for transactions in this nation?
That's a great question. Hopefully soon, but the reality is it will take years. It won't be an instant thing. It's going to take us maybe 2, 3, 4 years, perhaps even a little bit longer than that to get it to total mainstream. But what we are going to start to see is that certain use cases are going to accelerate a lot faster. So for example, if you think about payroll, getting payroll delivered more quickly is better for employers. They have less time with the funds floating out there. It's better for employees, and they're able to actually receive their funds faster. So I suspect that there are going to be certain subsegments of the industry that are really focused on making it go quickly. The big question in my mind is actually how fast banks are going to adopt it. We've seen FedNow launch with 35 banks. It's a non-trivial, but still fairly straightforward amount of work that a bank has to do to implement FedNow and get up and running on the system. The big question in my mind is how fast are we going to go from 35 to 350 to 3,500 financial institutions that are using FedNow and enabling all of those millions of consumers to actually use it on the back end.
You announced a deeper partnership with Cross River this morning on real-time payments, and one of the things that you highlighted was their proprietary technology, their own ability to do this. What is it that they have that other banks lack that you think need to be more commonplace to make this a reality?
So we very much appreciate the partnership with Cross River, and they're very much leaning into these newer real-time payment rails, which is great. And we have FedNow, which we're very excited and obviously has launched recently. We are continuing to lead into. And we also have RTP, which is a protocol that's built by many of the large banks. So I think with a combination of these two, we're going to be able to get to a lot more consumers a lot more quickly. And of course, we work with a number of banking partners, but Cross River is leaning in to help us get these products to market as quickly as we can.
What's funny is when Ed started to describe what's coming via FedNow, I thought of crypto. 365 days, all time, 24/7, ability to get access to money directly. Is that a competitive force? Do you see crypto still evolving in the same way if we suddenly do have more quick access to our money?
You know, it's an interesting point that you bring up because when we heard the promise of crypto or the promise of DeFi or many of these new protocols or tools, a lot of it was centered around this concept of enable consumers to have access to their money at all times, as you say. In some sense, FedNow is completing that journey. If this and when this gets to scale, it will allow consumers to, yes, move money in the time that they want to, in the instant that they want to. That's not to say, though, that crypto is dead in any sense. In fact, many cryptocurrency companies are likely to use FedNow as a funding mechanism or a funding rail to move money into, for example, a cryptocurrency exchange. So you still have to fund that account. So the reality is I expect these two to interplay well. I expect these two to end up living harmoniously together. However, it is funny to hear that message of 24/7, 365 coming from the Federal Reserve, which historically ran a 5-day-a-week, 9 to 5 type of system.
Talking about living harmoniously, you've been trying to live more harmoniously with banks, but it was what, a year or so ago that Visa was trying to buy you, and now basically you're becoming more and more of a competitive threat. When can you usurp Visa? When do you think you will be a dominant force within payments?
Broadly, we think about Visa as a very interesting corollary, a partner, and we know many people there personally, so I think of them as friends. The way that we think about our business is slightly different. It's a different vector than Visa itself. We focus on enabling a consumer to connect their financial account to an application that they want to use to get real-time value from their data. And yes, to enable bank-linked payments. That's not to say, though, that debit cards or credit cards or any of the existing payment rails are going to go away. We think about adding another option coming through FedNow as another choice for a consumer. It's another choice for a merchant. It's another choice for an application that might need to execute a funds transfer. And as we enter this new world of increasing competition, increasing choice, increasing optionality for a consumer, we actually see the two living alongside each other for quite a long time.
Zach, you mentioned competition. One domain where this is really playing out is in artificial intelligence, right? Taking a large language model, using the underlying technology to improve your service. Can you just talk a little bit of how you're investing in that space, what types of engineers you're onboarding to help you be competitive?
That's a great question, and an area that we think quite a lot about. The reality is AI has two major ways that we'll probably see it play out in financial services. The first is very simple and straightforward. So it's helping all businesses be more efficient. So that's making our support team more efficient. That's making the way that we write code more efficient. That's generally implementing AI tools to improve employee efficiency. And it's no different in financial services versus any other tech-enabled industry. The second is thinking about fundamentally new products that can only exist with the help of AI. So one of the areas that at Plaid we've been investing a lot in is building better tools for credit analytics and credit scoring. If you think back to the way that credit is scored today, or even the way that it was scored 10 years ago, those two aren't all that different. We have a FICO score. There's perhaps a bit more data that's being added in. At Plaid, we focus on building tooling to enable better data to go into your loan package. So if you're applying for a loan, you're perhaps someone that lived internationally and is just moving back to the US. You don't have a lot of employment history in the US, but you do have fairly good income and fairly good assets. How can you get all that data into your loan package? Well, Plaid builds a lot of that. The next phase that I'm eager to dive into is thinking about how can AI help inform those models, make better predictions about what a consumer is likely to be able to borrow, what they're likely going to be able to pay back, and how that's going to work. Now, we have a long way to go in terms of working with the regulators to figure out how exactly we can and when we should implement AI models for lending, importer lending decisions. But I'm excited to go on that journey, and I think that there's a very big opportunity for us all ahead.